I'm Nolan Watson.
And what do you do here?
I'm the president and CEO of a company called Sandstorm Gold.
Gold today had a bit of a tough day. It's at a 10-month low. When I was looking at it, it was 1548. What's your look at for gold right now with Sandstorm in the short term and the long term?
I would say that in the long term, I'm actually very bullish. I think that central bank quantitative easing is getting more and more significant of a factor, and the amount of debt that governments have taken on around the world means that the only way out, the only way to solve their problems is to print more money in the long term. However, in the short term, I am a little bit bearish. Just the pure reality of people are very optimistic about the US and the US economy right now and the potential for interest rates to go up in the short term. I think it's a little bit overdone. I think people are overconfident. But if they are overconfident, it does mean that the price will go down until they realize that it was overconfidence, and the longer term effects, I think, will then take hold. So I am bullish in the long term.
You said something interesting at the PDAC with the gold prices and what else was happening with the markets, that things were looking very bearish, very concerning for the juniors. We're talking about something like a 40% wipeout. You were looking, when you were talking, you were not as bearish. I think you said only, you said a smaller number of juniors are going to be making it through the year.
Yeah, I think my prediction, and this is just an estimate, is that probably around 200 companies are going to go insolvent over the next little while or wind themselves up. You'd be surprised at how well some management teams are able to just shutter the doors and spend nothing and keep their project on ice until things recover. And they're very, very reluctant to give up their day job. They don't want to lose their salary, for better or for worse. And so they find very resilient ways to stay alive. There's some companies that just aren't going to have a choice. Their working capital is already close to zero, if not negative. And those companies are probably going to go insolvent because the days of being able to put the project on ice and just wait it out have already come and gone because they can't raise money and their working capital is negative. So I figured that's around 200 companies, and those ones will probably go away permanently.
You mentioned Entrée Gold. You said it was just a great deal for you, but you also said that it is a one-off deal. Why is it a one-off deal?
Well, the streaming business model, what we do is we give companies money to go build mines, and what we get in return is the right to buy a certain percentage of their production. We buy it at a fixed price per ounce. And so the very nature of that business model is one where you're giving people money to go build their mines now. So you make an investment today, you get cash flow 2 or 3 years later. That's the normal streaming business model. Entrée deal was a one-off in the sense that it's going to probably be 9 years until Rio Tinto / Turquoise Hill is actually mining on Entrée's joint venture ground, and therefore it'll be 9 years till we get cash flow. That's the only opportunity that we were looking at that was anything remotely like that, and there's nothing currently in our pipeline like that. Everything that we're looking at doing right now going forward is a normal stream where we give them money to go build their mine, and we should get cash flow in the very near future.
With the market right now, with the tough junior market, how does that affect your business with what you do? Is it a good market to be in, or are there challenges?
It's a little bit of both. Candidly, this is an environment where often a stream cannot be 100% of the capital to put a mine into production. You need another form of capital. Often it comes in conjunction with equity financings. The equity market is totally and completely dead right now. It is down and out, and there are no signs of it coming back anytime soon. So a lot of those situations where we were advanced in discussions with mining companies, we're having to put those conversations on hold until the equity markets come back. So what Sandstorm's focusing on right now are even more advanced stage things where they've already sunk a lot of money into the property. Maybe CapEx is overrun a little bit, and they just realize that and they want to do a stream to get them finally into production. So from a Sandstorm perspective, I actually think that that's a good news thing in the sense that the things that we're looking at investing in are cash flow even nearer term than normal because of that. And so we're going to keep deploying that type of model.
Somebody's coming to present to you their project that they're working on. What is the one thing people will get wrong when they talk to you?
Well, when people are coming in and chatting with us about their projects, specifically, is that the question?
Yes.
Yeah, when people come and talk to us about their projects, I think one area where we see that they're maybe not correct over and over again is just the assumptions that they make with respect to how much they're going to produce and at what cost. I know it's been the mantra for the last 10 years of operating cost overruns, but still, even today in this environment with all of the history of all of the cost overruns, it's still continuing, and it's amazing to see how many times people come into our office then we'll say we're going to be able to produce gold at $700 an ounce. And after our technical team looks at it, we realize it's probably going to be closer to $1,200 or $1,300. And they're not really going to have any gross margin after they pay for their G&A. So that's something that we see over and over and over again. It's the number one reason we say no to transactions. And so what we're looking for right now at Sandstorm are true low-cost producers that are going to be able to mine for a very long period of time.
You mentioned that the management team is very important to you. You were talking about it's nice to see a company that actually has where the company ownership has still has a lot of stake in the company. How do you assess management?
Well, the first way you assess it is to look at their track record. It's important to look at what companies have they been involved with in the past, what projects have they developed in the past. What we don't want to do is invest in a mining company where the management team has never built a mine quite like this. If this is their first kick at the can, then we're not really interested in investing with them. We're looking for experience, and that experience is usually pretty easy to tell if you know the right people in the industry, you know the right people to ask, and you do a little bit of digging underneath, and you can find out whether they're good or not.
Sandstorm is a streaming company. You were talking at Mines and Money in London. You said that this business is really kind of at the start right now. If you're looking forward 10 years, what is it going to be? How is it going to look like? And how is it going to sit between the debt side and between the equity side?
Well, I think what we're trying to evolve Sandstorm into is an entity that has strategic relationships with debt providers and strategic relationships with equity providers, where what we want to be is kind of a one-stop shop where a mining company who wants to put their asset in production will come to Sandstorm first and say, all right, we want to do a stream. We're also going to do some debt and some equity. Sandstorm, can you help us arrange some of that debt and some of that equity? Sometimes they'll be sophisticated and they won't need our help, but often when the assets are going into production, management teams do need help understanding how a stream interlays with potential project financing and when the timing of equity financing should come into play. Although in this market it's somewhat of a moot point on the equity side because, as I said, things are fairly dead. But that's what we want to be long term, is that first go-to source of financing for mining companies. Our business model is streaming, and we're always going to have streaming as the core focus of what we do. It's always going to be the only thing that we're trying to buy. We're not a hedge fund. We never want to buy equity and hold equity or speculate on equity. We don't want to actually purchase debt and hold it long term. We want to be able to, if we ever buy debt, to spin it off very quickly to other funds. And so we're working on those strategic relationships, and we're trying to evolve streaming into a more friendly model, an easier model for mining companies to use to finance themselves.
You have the two businesses. You have Sandstorm Gold. You've also got Sandstorm Metals and Energy. When I was looking at it, it was a diverse portfolio. It had some natural gas. It had some coal in it. I think they saw some palladium in it. Is that a unique challenge when you have a different commodity groups like that in a streaming company, and how do you manage that?
It is a little bit, but it's also a bit of an opportunity in the sense that, so right now our largest stream is a copper stream. And we also do have probably our second largest stream is a palladium stream, and then our third largest is a natural gas stream. And all of those have different fundamentals in the industry, so we have to ensure that we have the technical people capable of assessing those various commodities. But where the opportunities lie is you can have a situation where copper is doing really well, new copper ETFs are coming in vogue, and hopefully the copper price hangs in there fairly well, and other commodity prices could come off, and you can use that copper revenue to buy streams in other commodities that are down and out. Or conversely, if copper went down and palladium is strong because palladium supply is challenged, it's all coming from South Africa for the most part, we can use palladium cash flow to go buy copper if copper goes down. So we have the ability to use cash flow in that model from high price commodities to be investing in low price commodities and always be getting the best deal. And so I think that in the very long term, that sort of business model presents an opportunity that should allow us to outperform just a single commodity streaming company.
Back in September, when you're talking to Tommy Humphrey, you were talking about investing, and then you're talking about smart money. Back at that time, it was companies that had some cash flow and that were close to production or in production right now. What's the smart money doing right now?
Selling. But having said that, I think the smart money is paring down core positions to the types of companies that are well run with good management teams and good cash balances. So the number one thing that the smart money is doing that I'm seeing is looking at companies, deciding how badly that company might need to raise money in the next 6 months. If the answer is they will need to raise money, smart money is selling. Smart money, though, is using this weakness in the market to buy opportunities where they realize the company doesn't need to raise money in the next 6 months, and that these low prices are an opportunity to increase a core position. So I think what you're doing is seeing, rather than just money flee the market, the smart money is using it to concentrate on truly the good opportunities where the management of those companies are not going to have to dilute their shareholders.
Favorite charity of yours is Nation's Cry. I was wondering, have you been to Africa lately, and could you tell me a bit about the charity?
I have been to Africa. We're building a junior secondary school right now in a city called Waterloo. It's right outside the capital town of Freetown. It's going to be for grades 7, 8, 9, and hopefully in a year or so we'll have a first intake of students. And just recently I was down there actually to pick up my newly adopted 14-year-old daughter. So I'm now the proud father of a teenage girl and from Africa, and it's going fantastic.
Thank you very much for your time, Nolan.